attributable, and they were incurred as a result of Ms. Zendaya contacting the attorney demanding information.
Can we,
And for you to make
Can we move on,
a
John?
side comment like that is really inappropriate. If
you
want
made,
to-
John, you made your point. Can we, you both made your point. Can we move on? Let's do the budget, please.
And do we need to have a, does anybody have any
Tom?
more questions for,
Yeah.
Warner or
You.
Just one
Chief
question,
Hutchins?
maybe Chief, maybe you can't answer, maybe someone up here. I was just curious, what, the over the limit under arrest, could you explain that to me, Dave? Over the limit under
What
arrest.
that was part of a town-wide campaign for the drunk driver.
It's a grant.
We get it every year, I think, don't we?
Yes, we do, every year.
Okay.
I have a question for Colleen. Colleen, I'm looking at the cash reconciliation. We had in excess of $5 million in the bank at the end of the year. But then, I'm anticipating revenues for interest. You're dropping from 35,000 to 17,000. Can you explain why it is we're only anticipating $17,000 if we have in excess of $5 million in the bank?
Because interest rates have been abysmal, and I can only anticipate the revenue up into what we earned in the prior year. So when
what
you're,
was it we earned last year? What was actual in 2000?
it was 17 and change. I don't have my.
On $5 million, we only earned 17 and
Well, I
change?
mean, the 5 million was a snapshot at the end of the year. I mean,
Right.
it's not always at 5 million, and you know, our main account went anywhere from $600 down to $200 in interest per month, depending. We're at 0.5% right now.
And could you explain to me the delinquent tax, your calculation for the 200,000 on delinquent taxes?
Well, we can anticipate an amount for delinquent tax revenue up into the collection rate that's figured on the delinquent tax collection with the receivable balance at the end of the year. So that was just, you know, a number that I put in based on what we had available for delinquent taxes.
Okay, again, was that premised upon last year's actual, or?
No, that's a number that's done differently. That comes from, there's a collection rate for your delinquent taxes,
Right.
and then it's applied against your end of the year receivable.
Did you have the calculations for that by any chance?
I can go and get it, it's in the AFS.
Because I'm just wondering whether or not, in light of where we are, whether or not if we make a concerted effort, we can't bring that number up.
I can tell you right off the bat, you definitely have more room that you can move up according to the calculation.
Well,
It just depends if you're confident that we'll collect all of that within this year, which, when we have a tax sale, as long as all of the properties sell, nothing gets written off to the municipality. Like what happened last year, that's exactly what happened, and Mary Grace then had 100% collection rate on her delinquencies. So it just, you know, we do have some movement there. We could definitely use.
And what were the receivables at the end of the year?
They were somewhere around 300,000.
Okay, so 300,000 at the end of the year. I think our tax collection rate last year was 100%.
For delinquents, yes.
Right, so why wouldn't we be anticipating closer to $300,000 on the delinquent taxes rather than $200,000?
We could absolutely do that.
Well, then, obviously, that's $100,000 that apparently I just found in the budget on this revenue side.
Well, the only thing I will tell you is that, once again, it's one of those things where if we don't collect it, then we take a hit on the revenue.
Well, I
But-
mean, I am familiar with tax sale certificates. I am, you know, I know that Mary Grace, whom Ms. Zendaya wants to lay off, along with Mr. Herner,
John, please, just stick to this, would you please?
has done a terrific job collecting our taxes. She's gotten 100% last year, and the reason why is because she works hard at getting people to pay their taxes. Yes, she did have to notice a tax sale last year, which was the first time in several years. But Spring Lake Heights property, being as valuable as it is, it would not be difficult at all to surmise that even if we were to go to a tax sale, that there would be purchasers for the tax sale certificates, because the anticipation of redemption to the tax sale certificates.
Is it dangerous for us to anticipate that?
No, it's not. You're making a business decision based upon what it is you think the factors are that come into play. What I'm saying is this: if we have $300,000 in delinquency at the end of the year 2010. Is that the current figure, or have we had payments back?
Oh, we've had payments back. Of
So,
course we have.
okay, so it's something less than 200,000, but based.
But you
this
still could
figure-
use that as your
We
anticipated.
raised it significantly last year as well, right?
We did.
So the point is, John, is that we raised it significantly last year. I have no problem raising it significantly again. But, you know,
I want it to be accurate, that's what I want to tell
I
you.
don't even know if you even realize.
I do, I understand exactly what it is.
Last year, but we did.
Look, I understand all the gimmicks that you pulled last year. What I'm talking about is, let's have this number be accurate this year. And if the anticipated, if the delinquency was 300,000, the receivables were 300,000 at the end of the year, and we've already had payment back of some of that, then obviously we can anticipate that amount of money. You're anticipating 200 of the 300. I think we should anticipate, based upon last year's 100% compliance rate, I think we should anticipate close to $300,000 for this year. And what I would say in defense of my position is, first of all, last year, everybody, we didn't have to sell a single tax sale certificate, because our taxpayers, when prodded by a tax sale certificate and the efforts of our tax collector, made good on all the payments. But even if this year, for some reason, they were unable to, when tax sale certificate sales are held, investors in tax sale certificates, they get 18% interest by statute. They make determinations on whether or not to purchase those tax sale certificates based upon whether or not they feel that there's going to be some timely redemption, or whether or not, even if there's not timely redemption, whether or not there'll be a sufficient redemption to pay them back their money plus interest. And since Spring Lake Heights has property at a high value, I think we can rest well assured that if we were to have to go to tax sale, certificate sale, that investors would purchase it. So I think we should be anticipating close to 100% of whatever our receivables were at the end of the year.
Mr. Dever?
I think that's a valid point, but I'd rather be a little more conservative and maybe drop that number by 25. Instead of saying an extra 100 on there, if you wanted to say 250 to 275, I think I would agree with that. But I think that, you can't predict any one year will be the same as the next. And this could be the year where we wind up not collecting 100%. So why hurt the other side of the budget by anticipating a revenue that just might not show up?
What I would do with that, I would anticipate.
I think that's a reasonable.
Well, let me suggest this, Rich. What I would do is I would anticipate the full collectibles, all right, at the year end. And if it's 300,000, you bring it up to 300,000. But that difference between the 300,000 and 200,000, we put into the surplus. Because our surplus has been stripped down due to recklessness in budgeting. And I think we need to bring that surplus back up, because right now, according to this budget, we've got $150,000 in surplus, which is not even a single month's operating expenses, and that is reckless. So I think we should take this number, bring it up to 300,000, and bring the surplus up into 250,000. That way, if we don't collect the $300,000, it doesn't hurt us, because it's going to be chargeable to the surplus line.
John, you're
So,
completely
I'm sorry, wait, can I ask John one question? I just want to clarify
Yes.
so I know what. So you would say bring the delinquent tax up and drop our surplus anticipated by the same amount?
Correct.
I mean, I have to agree that I like that plan, because my nervousness with bringing the one up is that then hurts surplus regeneration for next year. If we anticipate that and we don't collect it, it's a hit to surplus. And usually we collect over that, and that's part of the way that we grow surplus. So at least this would still preserve that surplus amount.
Yeah, I'm more confident with that, but, I mean, just by increasing your expected revenues on this sheet, if we do hit that revenue, it automatically becomes surplus. you know? So,
Right.
I mean, that's a point of keeping it low so that it
But that's why the
hopefully
way that John's suggesting it really achieves it either way.
It's more truthful and
is
honest.
playing with the numbers.
And so what does that do to our budget
It's
then?
making it accurate.
It keeps the budget the same.
Yeah.
It doesn't,
It
it's,
doesn't affect the bottom line.
it's taking one revenue and moving it, but it's
No,
preserving,
it's the other.
it's preserving some of the surplus balance so that we have it there, as John is saying, so that if something were to come up, it's there and available.
I still
So
would
we
want
do the,
something
we
like
do the,
that,
we
so.
do that, change, and we're basically still looking at the same
The
amount.
point is that it will come up, it doesn't affect us, because it's on the surface.
Right.
Yes.
So we're still looking, so we're still looking at $174,000?
Right.
All right, so
Too much.
anybody else have any other ideas?
Yeah, I
So
think
you
what we need
didn't
to
find
do.
any money?
What's that?
So you did, because you said
Yeah, I
before
did.
you found some money, but you actually didn't.
I found it, but I'm allocating it
Now
to
you're
surplus.
allocating it, okay, okay.
In fact, found it, but I'm allocating it to
Good,
surplus,
got it.
which is where, because our surplus,
Got it.
our surplus is at
No, no, I'm not
150,000.
arguing that, John, I just want to be clear.
Can,
Patty?
Superintendent and.
Yeah, do you, any more
Please,
questions
can
for them?
Any more questions?
Next up.
Thank you, gentlemen, I appreciate
Talk to
it.
you.
Thank you, good night.
Thanks, guys.
Now, we have the issue of the court clerk. And we have $50,000, but I was thinking $50,000 in the whole year. And so maybe that first
Municipal
quarter.
clerk.
Court clerk?
I mean,
Not the court
I mean, I'm sorry, the
Who's-
borough clerk. I wrote down court clerk, the borough clerk. But we haven't paid that wage for the first quarter, so we might have a little bit of savings there.
Well, why are we hiring, if we're $174,000 in the hole, why are we spending $50,000 for a borough clerk when we've got a borough clerk? Albeit an acting borough clerk, she's being compensated at $70,000 or $70,000. She's doing the job. I just think the idea that we would be hiring an additional staff member
We're not hiring.
under the circumstances
replacing.
that we're under, is just, once again,
We're
misguided.
replacing. We're not hiring.
Ma'am?
Sarah?
John, we're not actually doing a new hire here, we're replacing. I mean, if Teresa was still here, who was our previous borough clerk, we would be paying more in salary than what we're going to pay a new borough clerk. So we're not really increasing anything. If anything, we're gonna decrease because to hire a new borough clerk is gonna be less than what we were paying her.
So,
But the problem is that we're $175,000 in the hole. We
John.
need to make up that money somehow.
John.
I had a phone conversation from Ms. Zendejas telling me that I had to decide whether or not we were gonna be either deferring payments to the school board of the school collections or laying off our tax collector and our superintendent of public works. If that's the situation that we're in, why would we be talking about laying people off and threatening laying people off at the same time hiring people when our staff needs are that we have an acting borough clerk?
First of all, John, I don't think that I don't look at it as threats. I think when we talk about budgetary items, I believe we have to look at all aspects of what can be done. Throwing out, an idea of a furlough, a layoff, a cutting back of salaries, of doing this and doing that, it's just suggestions. It's not concrete information. We have to decide as a whole how we're going to approach this.
I think that if we get on with this, as far as people that actually have ideas on ways that we can reduce
Yeah, my
a little
idea is,
bit, I'm just talking about ideas, not complaints. I'm just talking about
my idea is
not
not to
bringing up,
hire a
and I'm
bunch
trying to go on, little by little, okay? I think we got $12,000 in savings in the borough clerk because we haven't had to pay anybody for the first quarter. That's something that Colleen and I can look into for the next, and also the court, not, I keep saying court, but the borough clerk, $12,000 savings. Also to make sure as far as the benefits are concerned, there's a few things But I think maybe we can decrease the benefits around 18